was going great and you had no doubts. But then you lost your job and now you're freaking out. How are you going to earn some more dough? Just listen to the Gary and Crystal Show.
Hello, everyone.
Welcome to the Gary
and Crystal
Show.
So it's been a while, hasn't it?
It has. It's been too long, I think.
Yeah, we've been enjoying the summer too much.
What are you going to do?
Yeah.
We're back.
Yeah, we went to Wicker Park Fest. That was a lot of fun. Mm-hmm. But we missed Lollapalooza.
Maybe next year.
Yeah, I really wanted to go, though.
But what are you going to do?
Yeah. Okay, so what do you want to talk about?
Well, you have a kind of a theme for the show, or a title for the show. So why don't you share with the class what
the
that
class?
Is? Yeah, the class.
What class?
You know, we got a class.
No, we don't. No, we don't.
All right, the audience.
Okay. Yeah, today's topic is whether or not America is heading towards third world nation status. And so, well, we're not really, I don't think that we're really heading towards third world nation status, but there are starting to be some parallels between our economy and the economy of a third world nation. A couple of things that you would look at, for example, when you think of a third world nation, you think about, there's usually with most third world nations, there's a vast inequality between the wealthy and the poor. And in America, that seems to be happening right now. It seems like the gap between the wealthy and the poor is increasing, and actually it's becoming more difficult now to move up the ladder, whereas before it was easy to move up the ladder. And this American dream, or the land of milk and honey, is becoming more and more difficult as education becomes more and more unaffordable, or the quality of public education, because of all the states having to cut their educational budget and funding. The quality of education isn't as good isn't as good as it could be, or as it used to be for public education. You talk about cutting teacher size, cutting classroom time. So that's one thing.
It used to be that the kids cut class, and now the schools are cutting classes.
Yeah, right. That's true. Another thing when you think about a third world nation is you look at the infrastructure. A lot of third world nations, I remember taking a trip one time to a third world country, and at night they didn't have street lights, and some of our states now are cutting off the street lights, and then the roads were they had a lot of potholes in it. So when you're walking around at night,
sounds like Chicago.
Yeah, sounds like how Chicago might be, or how a lot of states are heading towards that direction. So, but I do remember having to use a flashlight walking around at night, because if you didn't, you might accidentally fall into a pothole just because you couldn't see it, and that's because the country didn't have the money to fix up their sidewalks or their roadways. So that's another reason why we could be heading towards third world nation status. So those are just things to look at. Okay,
and I just want to start off talking about the banks, how we used to do.
Okay.
Because it's kind of interesting, because we haven't done this for a while, and you made a printout, and we actually found that this year 109 banks have closed so far, going into the end, into August.
Okay.
And last year, if you went back and looked at it the same time period, it was 72 banks.
Okay.
And you did a little calculations for me, and it shows that it's ahead 51%.
Right.
Accelerated rate. Right.
So basically, for every bank that closed last year, we're having 1.5 bank closed this year. So the banking crisis, even though it's not being talked about a lot in the news, it's still ongoing.
And you had a little theory about this whole situation.
Yeah, my theory is that I guess with the banking crisis, I feel like a couple of years ago when it collapsed, it really did collapse. And what we're doing now, different from the Great Depression, was when the banking system collapsed, the banks just completely went, they basically went under. But now, because we have FDIC insurance, the banks that let's say if the banking system collapsed, or if a lot of banks have failed, we're going about it in a more gradual way, where like every week so many banks are being closed, and that way it's not such a shock to the system that instead of having all the banks shut down all at once, you're having like 4 one week, 6 the next week, 3 the next week, then 1, then 0, and it's just kind of like it's a back and forth. The numbers kind of vary from week to week, but overall you can see that the banking failures or closures are actually accelerating. So, and it hasn't happened at this level at any time since the Great Depression. So, I think that the banking problem actually is a lot more widespread than what you may think. But I think it's just being handled in a more prudent manner than it was during the Great Depression.
Very interesting. So do you have an article you want to share?
Yeah, I wanted to start off with a article. It's called "The Crisis of the Middle Class America," and it's a Financial Times article, and it was dated July the 30th, 2010. And basically what this article talks about, it kind of features a couple of American families, and it talks about how the middle class basically is being diminished. How it's very hard now as a middle class family to make ends meet. And according to this article, it's actually been something that's been ongoing. We just didn't know that. Our standard of living has been decreasing, actually, I would say for the last couple of decades, according to this article. But because of easy credit, with interest rates being so low, there was just, and credit was available for the last, 10, 15 years. People were living above their means. They were using their home, for example, as a piggy bank. And so they, it kind of hit the fact that we actually had reached the peak and actually was starting to decline. And so now with that easy credit not being available and with the housing market having collapsed, it's just more apparent that the middle class now is really not, it's just not there anymore. It's starting to fall apart, basically. And so this particular article just talks about a couple of families that have a middle class income, but how hard it is for them to struggle, and just what the lifestyle is, just for them to try and make ends meet. And they're saying that, let's say back in the 60s and 70s, according to this article, for example, everyone, when you think about America, you would think about the Brady Bunch. That's what this article says. And yet really nowadays, the Brady Bunch actually would be more of an upper class family. That would not be a middle class family. And it says that actually 90% of all Americans are actually struggling and having a decrease in their standard of living, and really only 10% are having their standard of living, or being able to maintain their current standard of living.
It kind of feels like, there's a lot of people, I think, that are in that situation.
Right, and
it's very common. That's
true. I mean, for example, the article says that since 1973, the average income for U.S. families actually has been flat. But you wouldn't know it. It says that 90% of all American families have not seen an increase in their income since 1973. But I
guess that's adjusted, right, for inflation.
It is adjusted for inflation, but you wouldn't know it because of the easy availability of credit. So, for example, maybe when our parents were buying things, they didn't buy everything on credit. They weren't using their homes as a piggy bank. They didn't have the credit card availability that we had. So it kind of hit that problem. So this article says that we're in what they call either a Great Recession, or they call it the Great Stagnation. And it also is saying that...
I call it the Great Dagnation.
Yeah, the article though also goes on to say though that it's more difficult now if you are middle or lower income. It's actually a lot harder now to move out of that level, whereas before it was very common. If your parents gave you a good education, you could come from the poorest of the poor family, and you could actually reach the American dream. But now it's actually a lot more harder to do that.
I hear you.
Yeah. And then one of the other things that the article went on to say is that it talks about just to even maintain a middle class standard of living, everybody in the family has to work now. So whereas in the past, the husband actually was the only one that had to work, now not only does the husband and the wife has to work, but children are actually expected to contribute to the household. So once the children become of age where they can start working, some of their allowances, some of their little spending money, if they want to have that, it's expected that they work. And if they're college age kids, a lot of families are actually asking that their children actually contribute somewhat to the household expenses, maybe pay like a little bit of money towards rent. So it takes a whole family working now in order to make ends meet, whereas in the past, 20, 30 years ago, it only took one spouse to work. And the article goes on and gives a couple of reasons as to why this is happening in America. And one, it talks about manufacturing. In the past, America had a very strong manufacturing base. And, for example, if you work for the automobile company, you had a good pension, a steady job. And that was a very secure way of living, and that doesn't exist anymore. And so now America, actually only 12% of all jobs in the U.S. are manufacturing jobs. The other thing they're talking about